Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 28th, 2025, and we're diving into GES' second quarter earnings report for fiscal year 2026. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss GES's latest financial performance.
Revenue and profitability overview. Let's start with the top line. GES reported a net revenue of $773 million for the second quarter, which is a 6% increase in US dollars. John, can you elaborate on the factors driving this growth?
Absolutely. The revenue growth was primarily driven by stronger than expected comparable store sales in Europe and the Americas retail segment. Despite a challenging retail environment, GES managed to increase its operating margin to 2.3%, with an adjusted operating margin of 3.7%.
And how did this impact their earnings per share?
GES reported a GAAP EPS of 12 cents, but the adjusted EPS was 0.26 cents, which is significantly higher than the forecasted 14s. This indicates effective cost management and operational efficiencies.
Segment performance and challenges. John, let's break down the performance across different segments. How did each region fare this quarter?
Europe was the standout performer, with a 14% increase in revenue, driven by strong retail comparable sales. However, the Americas retail segment saw a slight decline of 1% in revenue, and Asia managed a modest 3% increase. Licensing revenue, on the other hand, decreased by 10%, reflecting some challenges in that area.
What are the implications of these results for GES's overall strategy?
The mixed performance across regions suggests that while GES is capitalizing on growth opportunities in Europe, it needs to address challenges in the Americas and licensing segments. Strategic adjustments may be necessary to sustain growth.
Proposed take-private transaction. GES recently announced a proposed take-private transaction with Authentic Brands Group. Can you explain what this entails?
Certain existing shareholders, including key figures like Maurice and Paul Marciano, will partner with Authentic Brands Group. Authentic will acquire 51% of GES's intellectual property, while the rolling stockholders will acquire 49% and all operating assets. Shareholders will receive $16.75 per share in cash, and the stock will be delisted post-transaction.
What does this mean for current investors?
For investors, this transaction offers a premium on the current share price, but it also means that GES will no longer be publicly traded, limiting future investment opportunities in the company.
Operational efficiencies and future outlook. Despite the challenges, GES reported net earnings of $6.2 million, a significant improvement from a net loss of $10.6 million in the prior year. What contributed to this turnaround?
The improvement is largely due to effective cost management and operational efficiencies. Adjusted net earnings were $13.8 million, although this is a decrease from the previous year. However, the company has suspended future guidance due to the pending transaction, which adds some uncertainty to their outlook.
How should investors interpret this suspension of guidance?
While the suspension is understandable given the transaction, it does create a lack of visibility into future performance. Investors should weigh the potential benefits of the transaction against the uncertainty it introduces.
Key takeaways. In summary, GES has shown resilience with a 6% revenue growth and an adjusted EPS of 26 cents beating the forecast. The proposed take-private transaction offers a premium to shareholders, but also suspends future guidance. John, any final thoughts?
GES has demonstrated strong operational management, but the future remains uncertain due to the transaction. Investors should consider the premium offer and the potential strategic benefits of going private.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on GES performance in the comments below.